Yo guys, welcome to the new video. In this video, I will exactly explain my entry patterns, which I use from the liquidity point to the liquidity point. Many of the guys are asking me about the entry patterns, where I enter the market and where I exit the market. So in this video, I will exactly break down the entry pattern I use and my target patterns. So watch the video till the end, and I will give you the exact checklist for my entries. So this is the bird's eye view of my entries according to the liquidity. I wait for the minor inducement or medium inducement or major inducement to be taken out in the marketplace, and this is the 1 minute structure, and this is the daily or the 15 minutes or the 15 minutes or 1 hour structure. This is based on the type of inducement: minor, medium, major. So, and the second point is we should wait for the sales transaction confirmed by the banks here. We should wait for the break of the structure towards the downward, and I will wait for the liquidity grab, and in this I should see the timing. There are special magic minutes in the liquidity inducement algorithm. The algorithm follows the time very much. The time is very much important than the price. If the timing is there and the liquidity is swept with the divergence and the volumetric analysis candle is formed here, then I will sell. Same thing here. After the liquidity sweep, I will sell. After the liquidity sweep, I will sell. I will exactly show you in the chart and show you how I entered the market at the liquidity and I exited the liquidity. So, peace guys, I will show. In this scenario, the market took the medium inducement. This is the 15-minute structure and this is the medium inducement. Now, we should look for the sells up to this liquidity, because I have explained in the past video set the market moves from the liquidity pool to the liquidity pool. Now, go to the 1 minute after the liquidity got taken out, and we should wait for the transaction to be happened. Here the seller's transaction got confirmed. I will annotate everything for you. You should also annotate everything like this in your chart, then it will be very clear to you. Now the transactions are confirmed. We can follow the order flow here, but I not enter here. I will always enter once the liquidity got taken out. Now this is my liquidity pool. I will enter the market once this liquidity is taken out, because this is the liquidity pool. Still it was not taking out. It is taking up liquidity. Yeah, it got taken out. See how it mitigated this order block. Now this is the volumetric analysis I mean. If you see this candle, this white candle has swept the before candle and it formed the engulfing candle. Now after I see the engulfing candle, I will instantly sell here and my stop loss exactly here. 3 stop loss I use for EU, and for GBP USD I use the 5 stop loss. Now you know my target liquidity is this liquidity. I will not go break even until this liquidity is taken out. Let's play the price. My stops are at break even once this liquidity got taken out. Let's use this red color. Now again, this was the liquidity pool. We can enter the sells there when the liquidity got taken out. Then we should mark the order block above the liquidity. This is the breaker block that is resting just above the liquidity, so the market can mitigate and go down. See, this is the retailer's trap. Retailer's trap. The market is trying to form the fake channel for the retailers. They think that this is the buy and we should buy here, but in the reality they will take the liquidity and mitigate the order block, and we will enter here and we take the liquidity. That's how the market moves. Simple if you understand the logic behind the algorithm. See how much liquidity it was stacking up. Now the first point is we wait for the liquidity grab and mitigation, second point. And the third point is we should wait for the volumetric analysis. If you see exactly here what happened is the first candle is get swept by the second candle and the third candle engulfed. This is the volumetric analysis. See, same thing happened here. The first candle is swept by the second candle, engulfing candle. Here, 3 pip stop loss makes sense. Target again this liquidity. My stops are break even in this trade once this low is taken out, right? If you have any doubts, please make sure ask me in the comment section. I will clear. Again, same thing. The market is stacking up the trend line liquidity. The market is stacking up the trend line liquidity. After this liquidity got taken out, we can look for the sells. Here the market got moved, but wait for the volumetric confirmation. Yeah, if you see here, we got engulfing candle pattern. If you see on the second time frame, this would be like this. This would be like this. This is the sales transaction. Again, in this wicks are second structure. Now, from this scenario, we can see that the sales transaction is happened by the banks. And the banks are ready to move the price after this engulfing candle. I will sell the market here at stop loss above these highs. 2.5 stop loss makes sense. Same target this liquidity. Yeah. Again, if you see here, this was the liquidity grab. This was the liquidity grab. This was the mitigation. And can you see the clear volumetric analysis here? The first candle is get swept by the second candle and the third candle engulfed the candle and we entered here. See, the same process is continued by the algorithm over and over and over and over and again. It is very easy for you to trade if you understand the algorithm. See, in this trade, we hit a loss. In this trade, we hit a loss. These are normal. Again, you should ask yourself, now the banks used this as a liquidity and from here the transaction has been happened and we should sell the market again. This was our sell after this engulfing candle. This was our sell. 3.5 stop loss makes sense. This trade we took the loss. The trading is nothing but we should follow the higher time frame liquidity flow with the shorter time frame liquidity flow. That's it. It's very easy. It's nothing to be complicated. It's just understanding the algorithm effectively. Again, the liquidity got taken out. This all trendline liquidity got taken out. And there is a volumetric analysis. Once this wicks are taken out by the candle, we can sell the market. Yeah, it got taken out. Here we can enter the market here with 4 pip stop loss. Makes sense, right? Now again sell the market here. See how much aggression is there after taking out the liquidity. Again, here if you observe the structure clearly, this is the high, this is the low, and this is the breaker block. Exactly here. First candle is swept by the second candle, and there is an engulfing candle. Now we enter here. There is another entry. Just target small 5% gain. That's it. This is how I trade the markets. Now you guys got some understanding. This is how I follow the flow of the market from the liquidity point to the liquidity point. And again for the buys from this liquidity, I will just do opposite for the buys. So hope you guys enjoyed the video, and if you wanna join my bootcamp, I am currently running the August bootcamp. I will leave the link in the description. You can follow through and in the comment section too. Peace guys. Hope you like the video.